trying to make a 500 to 1,000 a day, I say probably like. If I would have tried to use a 50-point stop, more than likely this would have been good. If you would have got the safest possible entry getting in as soon as it tapped that 1 hour gap at 10 in the morning. The whole job we went through when I went broke, trying to make money back, trying to fix my credit. We saw when I was practicing. We saw when I traded fucking GU. The whole entire blueprint for everything I've done up until this point. The main thing is getting confidence in yourself and system first so that once you get to a point, you know you're the problem. But we're going somewhere. It is approximately 5:30. Don't feel like it's Saturday, but it's Saturday. Good morning, everybody, and welcome back to another video. I'm Andre Diaz, and today it is Saturday, May 17th. It is 9 o'clock in the morning, and we're about to have our weekly market breakdown. I had a break-even week. It is what it is. Not every week is going to be an $8,000, $10,000 week. Some weeks I make a whole lot of money. Some weeks I end up just like this with zero. I started, and I'm right back where I started. Right where I ended. So it is what it is, but that's the beauty of the game. You win some, you lose some, you miss some, but that's the part of trading. Anybody that's a trader understands that. And I'm just being real with you guys, keeping it transparent to show you what it's really like. So we're gonna review all of last week's price action, go over all the trades that I coulda, shoulda, woulda taken, the ones that I did take, the L's, the W's, all of the above. And that's how you prepare for next week. That's how you continuously improve 1% a day. So with that being said, if you wanna work with me one-on-one, if you wanna get access to these weekly calls I do with the team, apply the first link in the description, but I'm gonna give you guys some free game because I love you guys. So here's like 5-10 minutes of some free game, so take advantage of it. Monday opened down here, so overall it was still a bullish week, but we didn't really do too much. We went all the way up on Monday, took us 2 days to come down, and then 3 days, another 2 days, go back up. But everything from this point right here is what we're gonna be going over, everything to the right. So with that being said, go over it. But firstly, just to give you guys a little, like I said, it was a bullish week, but why do I know that? From where we opened versus where we closed. If you think of the middle as like the body of a candle, it would be like this. So in a sense, this would be like what the candle looks like. Something like this. Like on the higher time frame. That would literally be the weekly candle based off of where it opened and closed. And one thing I want you guys to always know, the market is very fractal. The same thing that's going on the higher time frame is happening on the lower time frame. The same thing happened right here on this last hourly candle. If we go to the higher time frame, we go to the lower time frame, it's going to be something else. But it's just all a different perspective of what we're looking at. But yeah, like I said, it was a bullish week, but now we're going to go over what made it bullish and what trades we could have taken. Because just because it's bullish, just because we know the direction, doesn't necessarily mean much. We all know US 30, NAS 100 goes up more times than less, but that doesn't mean that we're always going to have a trade to be able to take advantage of when it comes to our system. So we just do the same thing that we always do. If we're going to be marking up Monday, I'm going to do the previous day's low from the last day, which would be Friday, going into Sunday. Previous is high, previous is low. As you can see, it was a bullish, very bullish day on Monday. Monday was very bullish. This candle right here was 3 a.m. So 3 a.m. in itself, London was bullish. And this is what I always tell you guys. London session, New York session, they have the most volume. That doesn't mean I'm going to trade London. I'm going to trade New York. But those two sessions have the most volume, especially when you're trying to trade something, US 30, NAS 100. These are going to be the main two times. So once we can do that, I'm also going to mark up the E's in session range. That's here. E's in session range. Also right here. But in my opinion, most of this price action isn't going to matter right now because all of the price action when it comes to us actually being able to get a trade during our time to trade is going to be up here. But I'm going to do one thing because I want to see if this is going to work. I'm going to pull a fib from the previous day's low to the current high up here before we started to retrace. And if you don't know where I drew it from the previous day's low, the current high before price started to retrace. And I want to see if it hit the continuation level. It indeed did not. So this is an example of price really not having a strong pullback at all. The market sometimes has a very deep pullback. Sometimes will give you a very extremely discounted price to be able to buy at. Sometimes it will do the opposite. It will be so trendy that it barely goes anywhere and just keeps on going. And this is an example of it kind of just keeping going, but there's still some stuff in here that you could have been able to take advantage of. The first thing I noticed is we had this bullish move and immediately started to retrace going into 9 o'clock in the morning. We also made this low down here at 10, 11, and 12 because we kind of consolidated. But why is this low down here important? The first thing I kind of saw with my eyes was that this is 42, 200 big figure level. That was the first thing I noticed. I'm gonna make this just a line. I'm gonna name it 42, 200 big figure level. Boom. So we can see that it retraced into this big figure level. In itself, that's not enough for me to be willing to take a trade, but I always tell you guys, have some confirmations, have other reasons why it should likely play out. And we have this low. And if you just simply look left, just keeping it very simple, there's just a little gap in there. Not the cleanest gap, but it's a gap that has another confirmation, such as this 42, 200. Now, in my opinion, did it fill that gap? It looks like it tried to fill it, like with that next candle over here, but it barely did. Even though I could mark up both of those, I'll just do it like that for the sake of that's actually the full fair value gap, not an imbalance, because both of those candles are closed. But you can see how close they are in price range. Within this range, that gap is only about 8 points away from 42, 200, so it's generally in the same area. The only thing that would have made this even more higher probability for me would have been if this had like a fib continuation level, if I like the fib lined up with a little bit better, because that would have been perfect. The main thing is also key is that this happened at 10 o'clock. This is happening within our time to trade. So even though we were up here, we were bearish, we did have a drop, I wouldn't have really been looking for shorts, just because when you're looking for the bias, pay attention to what London session has did firstly. After you see what London has did, look at the previous day. If London was bullish and the previous day was bullish, chances are New York might also be bullish. It might give you a retracement, but overall directional, it might be bullish. Just like this, we got a retracement for a little bit in New York, but it overall kept going bullish, which is what we always want to try to position ourselves in. You could scalp trade, you could try to get these trades here and there. I want to position myself to where I can take one trade and hold it as long as possible. I want to take one trade and be able to get the most that I can from it, right? So at 10 a.m., we traded into the 1 hour for value gap along with 42, 200 big figure level with a fact that we were already bullish. This in itself is enough for you to be willing to take a trade. Like I said, if you would have had the fib, this would have been like more than enough, because the fact of it is all these confirmations are in the same area. You wouldn't have really needed a big stop. Like if I would have tried to use a 50-point stop, more than likely this would have been good. If you would have got the safest possible entry getting in as soon as it tapped that 1 hour gap at 10 in the morning, you probably would have been in holding that trade for a little bit, because it did go up and down a few times. You might have even got stopped at break even if it hit TP1 and then came back. But this right here, if you would have had a 50-point stop loss for a trade like this, looking to just target that high up here, which was the 8 a.m. high, the high that we drew the fib from previously. But this is just the highest point before we start to retrace. That's a 1 to 5. Let's just even say you were being conservative and risking 100 points. That's your 1 to 2. Like this is very similar. I think this is the trade that I took on Friday, but it's a very clean trade, very simple. 10 in the morning. Why is that key? Because that's our time to trade. Okay, now that we're here at our time to trade, what is happening? We're trading into a 1 hour gap. Okay, where's the next closest gap that I see? The next closest gap is all the way down here. So in my opinion, if this doesn't work, which also has 42, 200, it is what it is. Then we come down here and maybe we'll line up with another fib. Maybe we'll line up with something else. Now in this case, we didn't retrace that far. I didn't need it to, because the first ideal entry that had more than enough confirmations for me to be willing to take a trade at the right time had the reaction that it did. And then once you would have been, say you didn't catch the trade at 10, say you didn't catch it at 11. By the time it's 12 o'clock, if you see that it's still consolidating at this area, I really wouldn't have been debating on the fact that it's just going to keep on falling. You can see what it did, and it's very clean. Clean trade, very simple, something that you can easily replicate. We're going to move on to the next. All right, that was a great call. Not going to lie, very informative, a lot of game. I have a couple of calls later on today, so you got some chart game. If you want more of the game, you already know what you got to do. But I have a lot of calls with some students today, so part of the 101s and mentorship, I have 101s every single week with students, and I have a lot of them today. You can't really see them, but I have 6 scheduled. It's a little bit too bright. But yeah, first though, we got to work on ourselves physically now. I just got some game. I was just talking for an hour straight, giving value to the team, just making myself feel good, because personally, I think I'm my best self when I'm giving value to people. One of my biggest things I like to do is give value, change lives, because that's what it puts me in the best frequency, puts me in the like best everything. It just makes me feel the best, and it just gives me energy, and I perform the best after I do stuff like that. So I'm gonna keep my morning going. It's 10 o'clock. Let's head to the gym. So I'm back from the gym and everything, but
Job is still not done. We got work to do. So I originally had 6 calls for the day, and my girlfriend texted me and she said she booked something for 6 o'clock, not knowing I had one-on-ones from 3:30 all the way until 6:30. So what I'm gonna do is I got a couple people that I'm gonna be able to do the call with early. It is 11, well, it's about to be 12 right now. It's 12 o'clock, we're about to get one of the calls started with DeMario. So with that being said, matter of fact, before anything, be like DeMario. He already came active and had all his questions that he already had for the call. So we about to go straight into it, get to the job, get some work done, and I'm gonna give you guys some free value. But if you wanna work with me one-on-one like him, you know what to do. Link in the description. Now I'm gonna take this because I was editing and getting content for Hair Dogs. I guess you can come out with me for now. We got work to do. Ugh. Why is that here? I don't know why the dog toy's out here. Oh. What do I need to get? What do I need to do to get the numbers I do on Fundus on a live account? Like, what do you mean in terms of profit? I would say bare minimum 1,000, 2,000, because even if you think about a 50K account, usually that's about 25. So if you look at it like that, but if you're trying to make a 500 to 1,000 a day, I say probably like 5 to 10K to where you can actually have enough to where really like have enough drawdown to where if you have a losing week, your account's not gone. But it's like even with a losing week, if you have a $10,000 account risking 500 to 1,000, if you enough trades can still compound enough to being able to lose that account, but ideally with the idea you're not going to lose 5, 10 trades in a row, I say that 500 to 1,000 per trade risking, but a 5 to 10K account is more than enough. Really, this comes down to the how comfortable you would be with those numbers, if that makes sense. Like if you would be comfortable risking that much, or if you want to kind of play around with it. But yeah, to make 1,000 a day, I say the easiest way is like 500 to 5,000 to a 10K account. Because on a 5K account, if you're risking 500 a trade, that can get you about 1,000 a trade. If you're risking 250, that's still like a 1 to 4, which is very possible, but not assuming you're gonna go for 1 to 2, 1 to 4s, 1 to 5s all the time, if that makes sense. Like if you have a 5 to 10K account, $1,000 is pretty accessible, and that's risking a decent amount. If you start risking 250, 300, you're still gonna have decent trades if they play out, if your trades are bigger, like risk reward wise, but just like a bare minimum, everybody can get 1 to 2s. Depending on what you wanna do, your goal behind social media, your goal behind content would like decide what type of content you should post. Bro, like I'm on the phone right now. Bro, that's exactly, they want to see that. Like I need to make a whole video. Me and DeMario just went through my whole notes.
Just talk, sit down and just talk about that.
Me and DeMario just went through all of my notes from 2018. The fucking blueprint, all the above. Like we going through content ideas, we going through the whole job. We went through when I went broke, trying to make money back, trying to fix my credit, trying to do all the above. Like I promise you, this shit just keeps on going. Like we're in 2023, we were in 2018. We saw when I first started trading. We saw when I was practicing. We saw when I traded fucking GU. I was trading GU and I turned $30 into 100 because I over leveraged the whole entire account. This shit is crazy. I need to make a whole video just on this. I wish I had recorded, bro. I was on a call with him for a minute. Like you guys could probably see the smile and joy in my face. A lot of the shit that I've been wanting, bro, I found the checklist that I had for the Rolex, for the Cartier. I found the checklist I had for an apartment, for my car. I found the screenshots of me saying I'm gonna practice driving my Mercedes like it's my Lamborghini. Bro, all of these things I just found in my notes from 2017, 2018, my first trading account, first everything. Bro, I'm gonna have to make a whole video on just that because there was so much game. Just like showing the exact blueprint, like literally everything. Everything from risk to reward, risk management, my system, my strategy, my daily routine, everything. I've never in my life went back and looked at that, but it's just like, it's a whole entire blueprint for everything I've done up until this point. That's just crazy. I'm gonna try to get some of these other calls done, but DeMario, if you're watching this, bro, I hope you enjoyed that. I needed that just as much as you needed that. I ain't gonna lie, cause I'm about to hop on a second call with my boy Bryce. First, instead of the trade because it's gonna cost more to put money into your own live account. And say, for example, if you aren't ready, you're gonna lose a lot more going into a live account immediately versus going into a funded account, because if you can do what you're saying you could do, if you do have the confidence that everything does go how it's supposed to, you should be able to get a payout and then put that into a live account from there. It's just better to use that instead of money that you have to work for, money that you spent time to be able to get, so you're not as attached to it. Nah, if you go with a 50K, I'm pretty sure the max drawdown you have on the 50K is like 25, so you might have been a little bit less than half a drawdown. But overall, too, they don't want you to make more than 50% of the profit in a day.
But you know what I mean? Like I could literally wake up at 6 a.m. and in the very like the first week or two, like I wouldn't even really trade like that. I just watch you guys like watch your chart, watch Guido, watch Angelo, see what you guys are looking for, and then being able to go on my own chart and then after that just kind of match it up to what you guys do.
That's the best thing. I always tell everybody, like, take what you're using, take the information and get experience and just actually use it. Those little things, take it, try to use it, back test it, try to forward test it, try to get as much experience, but just sit down and sometimes just take it in, because the information is cool, but once you get an understanding of the information, now you just got to apply it. Now you got to use it. And once you use it, if you see it play out, that's going to slowly build the confidence. And if you slowly build the confidence, it's just a matter of doing that enough times to where you don't need as much confidence. You don't need someone else to do it. You can do it yourself. Like you taking that trade and seeing how it could play out. I didn't need to be there for you to be able to see it, but that's going to lead to you being able to do it again now. All right, we're done with those 2 calls. I'm about to try to get some content edited. I don't know what my girlfriend has planned, but she said she booked something for 6 o'clock, so I'm just going to follow along. Yeah, get some content. It is approximately 1:53, no days off. We still working. And I have a couple other people that I want to get scheduled to like get their calls done sooner. So I'm going to see if they reply back. If not, we gotta wait a couple more hours. So I'm gonna try to get this done. Let's stay busy. We about to hop on to the call now with the other student I was waiting for. About to hop on with my boy Wes. Get straight to work. No days off, giving value, feeling good. Let's continue. Gotta put this burner down. People always try to like make fun of demo when in reality, they're the same thing. The only difference between demo trading and live trading is the emotions you're gonna have because of the possible expectation or the possible results. Live account, you have more emotions. So due to those emotions, because there's real money, you could possibly make real money, you could possibly lose real money, you could possibly be wrong on your trade idea. Like all these different things are gonna be emotions that aren't necessarily gonna be there in demo. But in terms of the process, understanding why it should go here, why you should get in, why you should get out, all of those things, it's going to be the same exact thing. And process is going to be the exact same, which is why people need to take advantage of demo. Because once you go from demo and you can get confidence in yourself and your system, when you go into a funded account, when you go into a live account, now you don't got to worry about, does my system work? Is that the reason I lost? Because all you're going to have to worry about is just handling the emotions, because you know based off experience, you know based off the back tested data that it already works because you've already seen it. You've already went through that whole thing using the demo, so you didn't have to lose real money. And then now the second phase will be worrying about, how can I keep myself in the game? How can I handle these losses? How can I handle being on win streaks? How can I handle losing streaks? And then kind of putting systems in place to learn how to manage risk accordingly. They are very similar. The difference between the fair value gap and the imbalance, the only real difference is a fair value gap has 3 closed candles. For a fair value gap to be created, it needs to have 3 closed candles with the first and the third like wicks not touching. That is what makes a fair value gap. When it comes to an imbalance, it doesn't have to be closed. You at least need 2 candles. So say one candle closes, right? The next candle, say it opens and starts pushing higher. Once it starts pushing higher, the high of the last candle, which would be the first candle, you can use that as an imbalance. Price might retrace into it and you can use it to take it higher. You could also use it on the third candle before it closes. So a fair value gap will mean essentially that third candle closes, but when you're in imbalance, that first candle's wick or high, you can still get traded into. Now, it may be a little bit more confusing, like without the chart, but if you weren't there for the call this morning, I recommend going to watch that. I'll send it in the ones to watch because I went over an imbalance difference and a fair value gap in the call this morning, like kind of visually, and I also showed inside of the chart. So
with a fair value gap, if you're trying to mark up fair value gaps, the main difference you got to understand between, say, a fair value gap and imbalance is a fair value gap is going to already be created with multiple candles. So an example of a fair value gap would be, say we have one bullish candle, right? Say we have another bullish candle, right? There is no fair value gap yet. Once we close right here, we get another bullish candle. Once that third candle closes and you realize that there's a wick, not a wick, but there's a gap in between the first and the third candle's wick, that would be a fair value gap. There has to be 3 closures in a direction for it to be a fair value gap. It don't even gotta necessarily be in the same direction, but it has to have 3 closures where the first candle's wick and the third candle's wick don't touch. The direction doesn't necessarily matter. This could have been, say, a bearish candle, but if the bearish candle's wick still doesn't touch this other high, this would be classified as a fair value gap right here. And then you would wait for price to say essentially trade into it to try to take it higher. Like that would be the rule of thumb, right? Now there's always gonna be other confirmations and stuff, but a fair value gap is when you have 3 closures. Now, an imbalance is another form of a gap, but there doesn't have to be 3 closures. You could be in the middle of the second candle, but as long as there's an old high or low, such as this right here, price might open, push higher, retrace into it, and on a lower time frame, think of it as price had a push, retrace into a gap. What's next? It can likely keep going. Now, on the higher time frames, on the hour, you don't really see it that much, but on the lower time frame, it probably trade into it before it kept going higher. An imbalance could also be used on the third candle. So say the second candle closes, you see that there's a gap down here, right? You see that there's not a third wick, but there's still this first wick. There's a gap in between the market. And an example of that would be like right over here. The first example I showed you guys earlier. See how price traded into it right here? That would be like a example of using the imbalance. Price traded into it on the third candle, just like this. Price opened, dropped into it. When it dropped into it, it used that as the reaction, and I did that wrong. Like that, and it pushes higher. That could be used as an imbalance, but just think of it as the fair value gaps. They got to get filled before they get to the next area. Think of it as fair value gap as like painting a wall. When you paint a wall, you got to go up, and then the paint starts to go away. You got to go right back down, fill it in, go right back up, continue going, right back down, fill it in, because it's not going to be evenly layered the entire time. That's the same thing with fair value gaps.
Girlfriend just got home and everything, so I was just with her. We're about to hop on second to last call of the day. We working. I'm a little bit tired now. I've been talking for a couple hours, and I just now realized I was awake for my girlfriend to go to work and to get back from work, and I'm still working, and I still got a vlog. Oh yeah, people always talk about a 9 to 5. I work damn near 9. I work 9, no, I was up 8. Too many hours. We don't make our money from the work that we're doing on, say, the individual day, but it's from the things that you've already done to become the person you are to do those things on that day, right? Because you're not just gonna wake up and automatically know how to trade, even though all it is to make money is catch some trades, right? But it's the person you become from the actions you already did previously. So you being able to make money, say, today, is from what you were doing previously. So you doing something right now is going to be the reason you make money Monday. So it is another day, another dollar. May not be today the dollar, but the dollar is being produced. Comes to trying to get the daily buys or get a good understanding of what today might do, just got to really pay attention to, firstly, what did London session do? If London session was bullish, okay, that's the first thing I'm going to take into consideration, because even if yesterday was bearish, if London was bullish, the chance of today being bullish during New York session might just be a little bit more likely, even though it might be a little bit counter trend trade. But I want to see what's happening today, because just because yesterday was bearish, if today is showing me that it's been bullish the entire time, I'm more likely to follow that. But say, for example, if London was bearish and the previous day was bearish, now they're kind of now why wouldn't I be bearish? World, right? Because Mondays usually you want to use as like testing the waters, get an idea what this week might do, get an idea what it's trying to do, and then from there you have more price action to be able to use to get an idea what's going to happen next. I would say the main thing is getting confidence in yourself and system first, so that once you get to a point, you know you're the problem, right? Like right now, do you think it's you or your system, or you don't know?
Honestly, it could be 50-50. I think it's like sometimes it is me, but like
that would be the first step then. The first step will be making sure that you have confidence in yourself and system to the point to where you know for a fact it's not your trading system, so where you can actually dial down and focus on the things that actually need to improve. Because right now, if you said it's 50-50, there could be a little bit of both for the reason why you are where you are, for the reason you're not consistent, right? So it just comes down to kind of understanding that and being able to put more focus into those things, such as focusing on the process and system first. Even if you failed the funded account now, maybe you should just focus on getting down to the process. Maybe you buy the Top Step account and just use your practice, prove to yourself first to the point to where you get confident enough so that when you go into the Top Step account, you trust yourself a lot more. Like that's something that's only going to be there from a funded account, from a live account, because with a funded account, you may not be trading real money, but now there's a possibility of getting funded. And if you get funded, then there's a possibility of getting a payout. You're thinking of all those things in your head, even if you don't really realize it. Every time you lose a trade, damn, I'm not going to get funded. I'm not going to get a payout. Even though you're not thinking about it, it's in the back. So it feels, and it hurts, and it feels way heavier than it really should. We're on our way somewhere. I don't know where we're going, but we're going somewhere. It is approximately 5:30. Like I said, though, I don't know what we're gonna do. We gotta eat too, so probably just record on my phone wherever I go, whatever we do. Yeah, finally get to get out the crib after doing all these calls. Group call done. It's 5 to 6 one-on-ones done. I do have to edit the vlog, but I got a lot of content for Instagram done. So yeah, at least I can go enjoy my Saturday. Don't feel like a Saturday, but it's Saturday. The road we gotta turn on to get to wherever we're going. There's a little accident. I'll probably zoom in when I'm recording. But yeah, there's a car over there, there's an ambulance and all that. There's people over there on the sidewalk. It's a bad job. We're about to get a massage. Cool little massage. I feel relaxed, nice and tired. All right, I ain't gonna lie. That was a great massage. Felt good. We got some food. We're about to be at the crib in like 5 minutes. Yeah, this is probably gonna be where I end the video off. After that massage, I just wanna eat, edit this video, and chill out. Cause I've been doing shit my entire Saturday so far. So yeah. With that being said, y'all stay safe. If you wanna work with me one-on-one, what is with this light? Light's a little crazy, but if you wanna work with me one-on-one, the first link in this, what is it? I don't know what it was on there, but I got it going. But like I was gonna say, first link in the description, you can work with me one-on-one. I got 6 spots available, so if you wanna see if you get accepted, you can apply in the first link. The second link is gonna be the free trading training. But with that being said, stay safe, stay busy, stay productive, and I will see you guys in tomorrow's daily video.